Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hey, how are you?
How are you, man? This tape is incredible, huh? It's starting to actually gain some speed here after what looked like maybe a positive day yesterday. So it's interesting. You know, I read an article actually the other day talking about how the Japanese the topics index, the TOPIX. So there's the Nikkei and then there's the topics. Topics is a little bit more concentrated, and I didn't realize that basically there's never been or in the last, call it however many years, that they always come in to buy it if the government always comes in to buy it if it's down anywhere near more than 0.5% in the morning session. And for the first time, and basically it's happened twice in the last month, where in the morning sessions the Japanese government has not come in to buy it, which is interesting because when I know it's them and it's not us, but when they're doing something like that, there's always talk about what are you doing, what are we doing, and how are we going to get out of this mess over time. So I think you have to take notice of that. I do suspect that for 410 is a big level here. There is a lot of open interest and stuff, but I think that it's important to that we'll look at that in a moment. The big number today was CPI and prices. We've been talking about inflation and whether it's transitory or not transitory. For the last couple of months, we've just been saying, look at your food bill, look at everything out there. For us, it seems like there's inflation. The number came out today it's a big number. 4.2 is the headline number. But again, I pulled up this article just to pull up. I'm trying to understand the facts, right? But the facts are, and you can get it on Zero Hedge, the facts are that apparently in the past, that's the gas, we'll get to that in a second, but in inflation, if you're looking at the CPI number, it has housing as they use a rental number, and rents haven't increased that much. And so if you looked at the housing prices, right, then that's jumped. I think they said it was 18% or so. And so if that was in the number, then the CPI would almost have been double, which is incredible. So, they can move things around and move the numbers as much as they want. At the end of the day, people are feeling the effects of inflation, or feeling the effects of higher, especially the food pricing. To me, that's the most dangerous one, because I always go back and, historically, food is a problem. If you can't eat, it doesn't matter what nationality you are, male, woman, it doesn't matter. All problems go to the side because everybody's got to put food on the table for their families. And so that's a big problem. I will keep on focusing on that. That is a very, very big problem. How are they going to solve this, if you're spending 20-30% here more to live or to buy clothes that you may need, if you can even afford to buy clothes after paying for food, but food is a big expense each month. You're also, they've alleviated the problem for the landlords, that the landlords could actually, there's no more, you can just live there and not get paid. But the landlords are probably going to start kicking everybody out fairly shortly, which is also a problem, right? There's, people are 10 months, a year in back rent that they owe. What you think that they're going to pay that? It's likely nobody's paying that. Nobody's coming up with, say, the average rent is anywhere from, call it $1,000 to $2,500. Nobody's coming up and saying, okay, landlord, thanks a lot. Here's $12,000 to $25,000 in cash that I owe you for the last year. I don't think anybody's doing that. I mean, 2%, but that's a problem too, right? So where do they go live? They have to now go find another place to live. And by the way, if you're renting and you go to another landlord, guess what they're going to do? They're going to say, did you pay the last landlord? And if you didn't, it was like, oh, I'm not sure I'm not sure I want you in my home. So this is again, we talk about it a lot. It's a chess game. the United States now playing its own game of chess is to some extent getting it's like there's like a checkmate scenario somewhere in there. The only move is once you allow inflation to go, if you're old enough, and I was born in the 70s, so I didn't feel it because I just wasn't old enough. But in the 1970s, when inflation hit, you know what the answer was? The answer is only one thing that you can do to inflation before it gets completely out of control, and then you become like, Zimbabwe. It's literally the only thing you can do is raise interest rates. Paul Volcker came in the 80s. He changed interest rates from where they were to, can you believe the 30-year bond in the United States in 1980 was, I want to say it was about 20%. Maybe it was 19, maybe it was 21, but it was 20% for 30 years. So the big news was in 2010, I remember they were saying that bond in 2000, maybe in 1980, 81, that bond, you were collecting 20% on top of your money for 30 years. Think about that. You didn't have to invest in the market. You didn't have to do anything. You were getting 20% of your money. Now, granted, it looked like we were going out of business and you weren't going to get your money back then. But, for 30 years, you could have collected 20%. Think about that. Right now, 30 years, you're collecting 2.5, whatever it is. The only way you can control inflation is by raising rates. Go try raising rates. Have Powell try raising rates right now. The market crashes. The market goes down, probably 20% from here. That's why they're so scared. They're so scared of this inflation get out of control. But then you got Biden just keep throwing around trillions of dollars. Not saying it's not needed or not saying, I'm just saying these headline numbers are causing people to panic. So we'll leave it at that inflation is obviously important. Runaway inflation is a disaster. And the only cure is to bring back those US dollars, to raise interest rates. You just got to bring those dollars out of circulation and bring them back in. It's the only cure. So talking about panic, we can look at the gas situation that's happening. And it's, it's one of these things where it's not a problem. Oh my gosh, let's, look, I saw this and I had to chuckle a little bit, but this is the state of the affairs, right? People are going to the gas station and pouring gasoline, and this doesn't look safe, just to me, just in general, running around, there's like a car bomb getting ready to explode. But putting gas in bags. This was a video. I don't even know if you can see it, but basically someone just flooring Target bags. So they're using Target bags to put gasoline. Wow. I mean, this is a mess, and I'm seeing the numbers here that they're talking about on this article saying, and I don't know how they actually get these numbers, but these are big numbers. North Carolina, almost 30% of the gas stations are without gasoline. Wow. So I hate jumping into the French, but I told my wife she's going out. I said, go fill up the tank of gas before, you know what I mean? I was like, I don't get stuck on a highway. I gotta, go pick up my kids and right. Be a mess. Anyway, so I don't know much about this. I know there was a ransom attack. There was a hacking. I don't know when it's supposed to end this weekend, but they always say something. There's always an answer of when it's going to end when people need it. But this is quite remarkable what's happening in the world, just in general, just as all of a sudden they say things happen in threes. It seems like it's, these big things just keep happening. So that's all. That said, with this going on in the backdrop, we have some UOA. A lot of the UAE is dominating in the oil space, and people are moving things around. But before looking at the UOA, let's at the UOA and the oil section, let's just talk about maybe a hedge here too, or just thinking about how the S&P 500, the market. Let's try to just put something together here to show people what are the possibilities here. What are we looking at? First things first is we have obviously this is a huge. I mean, you can't deny that this is a massive move. You can even go as far back here, right? Because this was moving up very nicely from coronavirus and whatnot, and you had this little dip here in the election. You had right here, sorry, in September, another dip in the right before the election. Then it just took off. These were violent at the time. I mean, we were talking about this 2 months ago. These were pretty violent, but in the grand scheme of things, if you look at this board from over the last year, it's not that much. So the market tends to have these. I think I said this last week. They tend to have these sharp 5% moves. In this case, what was this? This was this is kind of a level, so I'm just going to draw a line here. 350 down to, this was 320. So that's 30 points. That's about 8%. So it's about 7-8% here. This did another probably about 6% here. This was, what is this? 385 to 370, 15. That's about 4% here. This was 392, 93 to 70. That's about 20 points. That's about 5% here. So you get these sort of, sometimes they're violent. This happened over 5 days, but if you remember, this was very violent. Up, down, huge amounts. Okay. Here we're now at, let's call it 423 to 408, 15 points. That's, it's only about 3.5% so far. I do think that this is a big level here, 395. In the meantime, it's got to do its dance, and we're coming up on a 50-day, 404. 410, and I'm going to show you this in a second, is a big level because there's a decent amount of options there. But I think you start getting to 395, 390. You're going to get people sort of, remember, this is where it started. It was 390, talking about 392 here. Okay, drop down to 370. Tried to break the 392 level again, broke down for a second, and then shot straight up, and it's been 385 to a straight 423. So we literally went from 385 to 420. Let's just call it easy math, 425, because it's a little bit lower there. So that's 40 points, almost 40 points in the matter of 6-7 weeks, 40 points up. Okay, that's a big move. It's granted, we've done it before. It's not the first time we've done it, but when you have a 40-point move, it starts, getting harder to make another 40-point move without a downdraft. Okay, so this is what we're looking at. This is sort of the backdrop. I suspect that the problem is this is a little bit of a shock here, this number. So we gotta mark this like 412 range and sort of think about this as, is the market just going to come back, retake 412 and go back up to the old highs? It very well can. But I think this 410 plays a big role. We saw 416 played a role, 410, 405, 400. Let's look at, again, in the backdrop, we're in a strong bull market. So this is, I'm not sure. I think it crashes if Powell comes out, in June and says we're going to raise rates and just, stop this, nonsense for a little bit. They're going to give it the inflation a little bit of a bump here and just say, a wall, and say, we're going to tell the market we got this under control. Maybe even if he does it a quarter, the market's dropping 5%. It would be such a surprise, but this number is a surprise. They're still talking transitory. Don't worry about it. But people are starting to panic around. So I would say that what we're up against is probably the next month of real data coming in, and the Fed just basically saying it's transitory. Trust us, everything is fine. So right. that's the backdrop. Let's look at what the options market is sort of looking at here. By looking at the board, we're looking at market 408 traded as low as almost, I think, in traded 406 today a little bit, high 406s, 47. So let's just look at 390 to 410. Let's give it to 415 just to give some. All right, so if this is three, let's look at 395 just to tighten it up. 395. All right, I'm gonna make this just a little bit wider and a little bit bigger. All right. What I've looked at here is essentially a lot of this is in May, so you can see it's very clear. I just took the top 5% between 395 and 415. I'm looking at open interest on the puts here. And if I wanted to get a picture of, say, the next, I'm going to say the next, I'm just going to click on all of these, the next up until June. And we'll go all the way up until June. So one more here, June 18th. Okay. So if I go through June and then I chart this, I sort of want to get a look at, where the big levels are. And you see clearly 420 was a big level for calls, but on the put side, it was pretty light up here. Light meaning in the grand scheme of things. This starts getting to be a decent amount, 410. You got 405 and you got 400. So the question is, are these, if they were bought, then they're stop signs. If people were selling them, then their sort of potential crash, levels.
Right.
So and the reason why, if everybody's long those, then as the market goes down, they will be selling the puts to close, and that helps push the market up. If people are short these, so for example, if they have something like, a 410, 400 put spread, then as it goes down, this one becomes a short gamma position for the dealers, and so you could see a push through as well. So it's all going to depend on how people are placed. But I can tell you there was a lot of activity in buying as we were going through. These have been there for a while. So what I'll do is I like to go back and just kind of focus, because we went to June, but you could see there's nothing really in June, right? You're looking at over here. There's not much going on in June. Sorry, this thing's going a little bit out of whack here. My mouse. Okay, so there's not, you could just see the pocket, right? We're looking at 410 to 400. There's nothing really here, okay? Here, where do you see it? It's very clear. You see most of it in May. Okay, May was the big month. You're starting to see, I'm sure, today there's, tomorrow this will be up a little bit. This is today, but tomorrow these numbers will be up a little bit. But the 410, you see 20,000, 37,000, 83,000. It's all right around here. May regular expiration 145s and 400. So these are somewhat, they call it stop signs or whatnot. It should slow in general. Things should slow down from 405 to 400. We have this put spread on to 395, and that's part of the reason why I did a put spread out to June. We have it out to June here, but because I believe it's going to slow down here, and then it's going to give you a chance once this May is done, and then there's nothing. Remember what happens now. Right now, where we are, 408, if you look at the puts, it looks so expensive. So it looks so expensive to pay for the 405 put right now. And that's what makes that's why they say that the market doesn't crash. Sure, if there's an event, the market might crash on one day and immediately something awful happens and the market crashes one day. But usually what happens is the VIX or volatility starts creeping up, right? And then it holds and then it shoots up. So it's a creep up first, then it shoots up. It's not you usually don't get this market's really 11 and it shoots up. And part of the reason, besides having this exogenous event, is that there's, again, these stop signs hold the market at certain levels. It trades back up, then they disappear, and then it allows it to come down. So you have these lockstep movements, and that's what you got to watch. And so here today, again, I'm showing you the Mays. So if you want to buy, if you're looking at hedges, I think you want to go beyond. You want to go beyond the May to sort of get that real drop. It could happen that we get down to 400 today or 395 or wherever, and it's a possibility by the end of this week. This was such a big shock that I think portfolio managers are now saying, you know what, get out of another third. This is the pocket right here for the next week. But I suspect that by May expiration, we can get something back into. It'll be hard, I think, to keep it below this range. Okay, call it 408 to 400. I think you'll land somewhere here, and then after that, then when this disappears, I'm assuming this is all buying. It maybe not, but I'm assuming this is buying. If this disappears and this disappears, well, then all of a sudden you have, people would have to pay a lot more money for these, and they're just not going to be able to buy enough.
Right. I see.
Okay. So does that make sense?
Yep.
All right. So given that backdrop, so now we have the technicals, and now I'm trying to show you how to read this board. You have a lot of stop signs in May. So, the idea is that if people are long these puts, they're stop signs. If people are short them because they have some crazy structure like 1x2s or whatnot, then that could cause another push lower. So, let's go to the options chain and just look at what we're looking at in SPYs here. So in today's activity, you see just a lot of the day traders are in. These expired today. A lot of options. Okay, the 410s were active. They blew through this stop sign, which is a tell, if you want to call it that. They're blowing the 408s. They have now 100,000. It's sort of catch up. When the market starts doing this, people start running for these 50-cent puts, and you could see the market sort of at the end of today have a move right back to 410, then back. It'll shake people out, and it's going to find, like water, it's going to move to the least resistance. So you got the 408s, 55,000. It's clearly weighted more towards puts. 100, 89, 180. This is up here, 84, 68, 55. The question is, I think we've talked about in the past, where's the most pain. I think that's what people use, the most pain index, and they try to determine where the stock is. What you're looking at essentially is, where does the stock end today? Where I like to look at it this way: where does the stock end today that hurts the most people right now? And I would say because people have been buying these calls looking for a pullback all day, then you're gonna get people buying the 408s. You're gonna get people paying $1 for these. If it closes at 409, then this person makes no money. Okay. This person pays $1, closes at 409. These all go to zero, and the 409 puts, maybe he's been paying probably on average about 50 cents to $1 all day. He actually doesn't make that much money either. So, people get wiped out when the market's going to end where the most people get wiped out. Excuse me. So that's the day trading thing. That's what I'm looking at today. And I think if you want, we've talked about the big day is Monday for taxes. I think people taking money out, and maybe there's some of that going on as well. But I think if you're looking at May, then you can probably, shorter term, I would say I'd rather see you do a put spread in May than do an outright puts, only because there's so much open interest here that the market's got to chew through, and it adds up. It adds up over, as we get closer to next Friday, this stuff, the deltas on this thing is going to cause this thing to stop. So barring any disaster, you could get something where you get down to 400, 398, and then it's one of those V's where you saw it before. We traded 393, 372, 372 shoots back up to 390, trades back down 372, then trades all the way back up to 423. You can get similar action here. So you want to be very careful with, either taking. You can't be too greedy here. It becomes like a washing machine where it's up and down. The spread that I'm looking at here, that I would look for if someone said, where can I hedge for the next couple of weeks to kind of keep my brain sane? You could see how expensive it is, right? A 1 week option to 404s now look like, they're a full percent here. Not that it can't go down another full percent, but we're down 3.5% already. We're looking at a 5 to 6% pullback. Paying 4.5 right here is tough. So 4.5, though, you could say let's say the 405's at 488, paying 488 and selling this one at 170, call it 171. That gives you $3.17. So 317 for a 15-point spread feels about right. And again, you're leaning on the fact that things will be whippy and slow down. It gets to 390. This does explode, but you'll have 15 will probably turn into about $7, $8, call it $8. So you pay 3 and change, $8. It's about 175%. That's if it gets down here, but it's likely not to get down to 390 so quickly because you have the open interest. So that's how I would play. If you're looking for something over, you're worried right now, things don't look good to you, and it doesn't look good. I'm not going to sugarcoat it. I think we can see 400 because it's looking for this. You see this area right here. You see this gap? That gap is what I'm concerned about. The 395 to 405. It happened in a couple of days, and I remember this. There was a Friday. The number came out, and it shot up on the Friday. The number came out, and it shot to 405. So this was a very sharp move from 390, 393. This is Wednesday, Thursday, Friday, I believe. Wednesday, Thursday, Friday. And this was a Monday. 3 days, it shot from 393 to 403, 405. And it was just very, very quick and took everybody by surprise. So this area is where I think it could close quickly. And but I think the open interest will hold it. Okay. Cool.
Okay.
All right.
Nice.
Good.
Thank you.
Let's take a look at what's been trading today. Well, first let's talk about one name that, before we get into oils,
Okay.
let's talk about. I just want to mention this Palantir just to because we talk about our lines and the risk reward and earnings and how it's all playing out. You see here that the reason, part of the reason, this is a perfect example. Part of the reason we're drawing these lines for you is to say, look, if you're doing this on a short-term basis and you're playing 2-3 weeks, which most people are doing right now, it's that they've sort of condensed the time frame of how long they want to be involved in this game. The 21 line is a big line. Before buying this, you kind of want to either, if you're going to buy it outright, you kind of want to see the buyers take that line. It's a very clear line. This is the exact level where the buyers and sellers are switching hands here, and the sellers are in control until that 21 line is taken. They're going to keep pressing that 21 line. They're going to force a buyer to say, I really want it. So if you're going to buy, if you're playing in the stock, 21 is the real level. Long term, sure, you could start nibbling here. You got to be prepared to buy it, wherever it goes. But you can nibble here. But 21, I think, is the level. And the reason we're telling you, I'm saying the 20-30 call spread, you can buy right now for. We've looked at it before earnings, even after here. I'm seeing a little bit of action, but the June, let's call it August. I'll just say it again. This is a better. If you're getting involved in Palantir, this is a better trade. Let's call it today the 20-30 call spread at $1.70. That's just a better trade. $1.70 for the 20s. If it's right, it should go. If you're right in Palantir and AI is, it's going to come together, they're going to come back for technology, the market's going to want growth, then 20 to 30 is a great, call it, stopper, if you will, or a placeholder, I like to say. It's a great placeholder for right now in this time. Nobody knows if the market's going to do the 398 dance all the way back up to 440. Very well could do that. That's been the trend for the last year. This to me is just an easier way on the mind to actually play the name. Again, no problem with the earnings. They were good. AI, I'm a big believer in AI, and but I just think this is a safer way to play. Talking about AI, and now I'm just switching gears here for a second. I actually just read a story on this stock here. The stock was up actually $20 today. It's under pressure. It's an expensive stock. It's not a cheap stock. It's trades at 8 billion, 8 billion market cap. 7, I think today it was up to about 7 billion. Sorry, so 7.5 billion. And so what they do is they basically, this is really interesting because it goes along with the bank story. If the market is okay, the banks are going to flood the gates with lending, right? They have gotten themselves in a situation with taking a lot of deposits. And with those deposits, they now need to lend. So they're just lending. They're going to try to lend to anyone that actually wants money. Okay. Now, what Upstart does is they've built this machine. They've built a software that basically is a double boost for the banks. What it does is it's able to find the best lenders, the best borrowers, sorry, for the lenders, and it's able to predict who's actually going to pay their mortgages, over time. Now, obviously, that's good for the banks, but even better, it's good for the customer because the banks would be able to lower the interest rate that they give to this person, because if the FICO scores are basically how they do it right now, and if that doesn't work for someone, then your rate for a mortgage is X% higher. Here, they're going to they have, I think it's like 1,600 points that they look at about you, and it does what it does. The AI does what it does, and it comes up with an answer, and it says his FICO score might be 500, but this guy's going to actually pay his mortgage. So again, it helps the consumer who gets a lower interest rate. It helps the banks because they're able to give out more loans to more people, and it actually over time has helped the banks to lower their loan loss. So it's a huge win for everyone. That's why the stock is so expensive. And I get it. It's literally a lotto ticket on did they build the right mousetrap and literally just sell their products to these banks. And I think I'm still reading through it, but I think that they get somehow some percentage, but at some point you could charge whatever you want. You could charge whatever you want with some of these, with a product like this, like the banks, there's nothing better for the bank's loan loss reserves could be anywhere from $2 to $10 billion, right? Depending on what part of the cycle. So, if you're talking about billions and billions of dollars, they'll pay a lot for this product just to have it and have the machine tell them these are the best loans. So I think it's an interesting one, an interesting read. You should go read the transcript. The CEO is super excited. He's telling the full story. They're just doing loans on more mortgages now, but now they're getting into car loans, and they just bought this company Prodigy, which means that when you go to a dealership and you want to buy a car and you want to get a loan, they do it right on the spot, real quick, like instantaneously. This AI, literally, you tell them I suspect that they're not only using actual information, they're probably using things like, is he a family person? Is he, like judging character? Like, does he pay? Everything. I mean, for whatever reason, they have a good mousetrap. So this is an interesting name. Again, it trades like 100 times earnings. So I think that's part of the reason why it's come off. It was up $20 today on the earnings report. Third Point is in the name. Dan Loeb, obviously a very respected investor. They got in early on and they bought 1.2 million shares on the IPO. Not a name that I think is super watched on the street, but I've seen it, and I saw UPST over the last few weeks in the unusual options activity. So I think it's starting to warm up. People are starting to get involved in the name. I'd love to see it come down a little bit back to the IPO price and maybe start thinking about it. But it's very interesting, and it's artificial intelligence. It's right up our alleys with this data and using technology to lower costs, put out more product at a better cost for the consumer, and a win for the banks. It would be huge. So that's something to take a look at.
Cool.
All right, so now let's get into the oils. Okay, so what are we seeing in the oils? Well, I'm gonna rely. I think Rudy. I don't know if Rudy's on, but Rudy's the master in my mind of. He's right in Texas or right in the oil fields. But we've been seeing activity here in Schlumberger in August, September, in June. It's just a lot more active. Frankly, I'm not sure. There's spreads going on, and I'm not 100% sure I could decipher exactly what they're doing. Although I think I see what they're doing. So let's go through Schlumberger first. We have the September 35 calls versus the 30 puts. Looks like this sort of traded here. That was interesting. 2,000 here. So we're going to look at it here. The stock came out. The stock was trading up, and we had someone buy or it looks like they traded. Looks like on the bid here, 2,000 at 216, and Ivy here, which is a little bit lower than where we are today. So that was the first part, 2,000, and then 4,000 here. We could see here, it looks like the 2,000 traded at around 230. So it looks like they're doing something here 4,000 times. I'm still trying to figure it out. It is a tough one. What I do in these scenarios, because it looks like some's a buy, it looks like some might be a sale here.
Right.
So in these scenarios, what I do is I try to take a look at sort of how we look at determine. I'm telling you it's tough, and I'm not sure my confidence is very high on knowing whether or not they buy or sold these puts or calls. But we can look at the 2 minute. So let's look at Marco. Tell me what time they traded it. It was like
10:22.
10:22. So if we look here, it traded at 10:22, which is sort of exactly right here. Okay. So it traded right here, and then the stock went straight down for, call it the 50 cents, about 40 cents, 35 cents. So right when that traded, it shot down. And that's telling me that perhaps it was someone selling calls and buying puts, to hedge a little bit. So we have a situation where the stock is up. The stock is up a significant amount from 24.5 to 32 over the last, call it 2 weeks. It would make sense that someone's selling some calls to buy some puts here to hedge. And they're using the 35.30. So we have here, I think this is interesting because we have here, they're protecting, you see how it broke out through 30?
Yep.
So they're protecting this level right here. They're protecting $30 and they're selling the 35s up here. So if you're long, say they're long 400,000, 500,000 shares, or maybe 1 million shares, they say, all right, on 40% of it, we're going to sell these and we're going to protect, 20% of our position with it here. And if it comes back down here for whatever reason, we'll buy it. So this is someone, it seems like it's someone who is long, who's just trying to protect a certain range for a certain period of time.
Right.
Okay. So that's in Schlumberger. The other area we've seen is in these oil services is in Halliburton. Halliburton here, we're looking at the 21.27 in June. Let's see here.
No, October and July, actually. October was 21.27. Yeah.
Okay. So the October, that's what I was looking at. Okay. So the October, there we go. Interesting enough, happened at the same time, right? It's like 2 minutes apart. So this trade is interesting. Here, though, let's see the 27 calls. It looks, we can't say what it is. It's right in the middle, 46.7. So $1.55, 2,000 times. And then this one is $1.75, 2,000 times. Again, we can't tell, but if you look at the chart in Halliburton, right at the exact time that that traded, let's go here. Same time, Halliburton also went down, just like Schlumberger. So to me, it looks like someone is buying those puts, the 21 puts, and selling the 27 calls. So in the oil services names, you're getting people who are saying, you know what, I'm going to take some chips off here. Okay, so again, we're seeing it once there, twice there. I can show it to you in ExxonMobil as well. There's a lot of activity. Exxon shoots up. You're seeing a lot of call selling in ExxonMobil. Okay, the stock has just look at the just to look at the chart in ExxonMobil. Shot a move up here. Now keep in mind, that you're looking at this. This has got to recapture this level. Otherwise, what are you seeing here? You're seeing here a little bit of a divergence here and here. That doesn't mean it's going to go straight down. It just means that it could take a little bit of break here. If this is bullish and it's going to keep going up, this is the time where it looks like it's taking a break. But, it's had its move. A break would be probably 54, 53 range. So you're looking anywhere from the call it 53 to 63 range is going to be your break, maybe for a little bit of time. The 50-day moves up. Maybe it's a 2-week break. I don't know, but that's what we're looking at. That to me is 63 is another breakout. Your people are going to be getting long here again. If it's breaking out, oil would have to have moved up.
Right.
Okay. So again, but ExxonMobil, all the UOA selling up top. They're selling a little bit of calls up top here, taking some profits, I'm sure.
Okay, great.
What else are you seeing?
What else I'm seeing? I had a question yesterday. Somebody asked about Disney earnings. I think they're tomorrow, so we can take a look at it if there's a play. And before we get into that, guys, help us out. Like the video, subscribe to the channel if you haven't. It really helps us out. We reached 5,000 subscribers. The next milestone is 10, and we can't get there without you guys. So we appreciate your support.
Let's take a look at Disney. Disney is a darling. The problem with Disney, I've been watching this level here in Disney. The Morgan Stanley just upgraded them today. So this is a clear level, 179. You want to see it hold. The 50-day looks like it's coming off a little bit here. And, the next stop here, you have 160s kind of right in the middle of this gap, right? You see this gap here? Yep. They held it here. So you're talking about 160, 180, 200, right? These are the levels. 160, 180, 200. Very clear, simple. After that, let's see what this is, 135. Okay, and then even you got this gap right here. So right here from 125. Okay, that things would have to really fall apart here. This is up because of what they've done in the video. Now they're talking about reopening the parks and getting that going. Maybe. I'm concerned here the way this is trading here. It bounce. See over here, it's kind of bouncing over here. It bounces. This took from here to here. This took almost a month, right? You're talking about almost a month here from this low to this low, and then from this low to this low, it took about 3 weeks, 2 weeks. It looks like 2.5 weeks. And now from this low again to the low again, it's taken 4 days. So you could see how it's pushing faster getting to this level. I would suspect that, a hedge is probably a good way to think if you're long the name and you just want to get past this, what's been, a tough earnings period. And Disney is half technology now, half, their recreational parks. So let's just see how they're pricing these things. I don't think they would be pricing it for a big move lower, but that's sort of when you want to maybe protect against, because the downside is significant, significant 10-15%. So let's see here for the earnings, stock trading 180. If you're long the name, and you're trying to put the least amount of money to try to protect, we have it going down to potentially going down to 60. Does it get there in one shot? Not sure. There's a little bit of a 170 in play here too. So if you're trying to, when you're long the name, you're trying to spend the least amount of money to protect some amount. You basically have to be thinking that you're a buyer somewhere between 140, 160. Again, it shouldn't fall out of bed that much, but you never know. So I would say that if you're long the name and you're looking for a hedge, the 175, something like the 175, 167, 175, 167 at $1.50 seems like the right play to protect yourself in case it got lower. So you're taking $15 out of the 175 to 60 range, right? And you're really going to protect. You're going to protect from right around here to, let's call it right around here. Okay, so that's what you're protecting out of this. It's already moved. Remember, it's already come from about 188 over the last couple of days, down about 4%, right? 4% down to another, call it 5%. It would be a 10% drop, which would be sort of, this is 20 from 91 is 71. So again, 170 should probably hold here, unless it's a complete disaster. But people love Disney. They love the story. This has been a bull chart. It's this to here through the pandemic, up here. It's now reopening. 160 to 200 is going to be, I think, is the right amount of space you need. And if there's good reopening, Morgan Stanley has it. They're up their target up to 210. So it's not a hero call, but it's saying that we like it and it can go up. So I would say that to get through earnings. And again, I'm using a put spread only because, I think the downside is somewhat limited on Disney. It's a name people want to own lower, and so I think they'll come into it. But I think taking half of what the possibility is to the downside risk reward level is probably good at $1. What do we call it? $1.70. So on the upside, if you were or if you're looking for, let's do one more protection, because if you want to get through the upside, Disney's there's a lot of volume here that's happened over the course of the last couple of months between 180, 190. So buying something like let's call it the 175 out to June. What could I get for the 190s? So let's say I don't even like that, but maybe the 175, you might even do like a put spread, 175, protect the 160. So 175, 560, 180, that's call it 380. So 385, right? 375, 380 for the 175, 160. And then you can sell the 195s at about 230. So I think that works, right? You're selling the 195s 230, you're selling the 160s at 185. That's $4.15, and you subtract that from 559. That's $1.40, right around $1.40. So I like that trade too as a hedge, giving yourself a little bit of time and saying, look, I can do this trade, protect myself. I give up a little bit of the upside, but I think you'd be happy right now if Disney just shot back up another 10% towards the 195 level. So that's one way. The other way, just playing it to the long side, if you're long, you can do something like the 185 200. It would go a little bit closer. For the Mays, the 185. Let's see what the Mays are. 182. That'd be interesting. The 182 for next week, the 182, 195, 1 by 2. So you would buy 182 and a half for 375, sell 2 of the 195s at $1. Okay, so that's $2 there. You get $2 here and 375, so it's $1.75. So you pay $1.75 to get the 182 and a half, 195 exposure. That's 12 and a half points. That's the most it could be worth. But you're really you could take 12 and you're basically taking 182 and a half less 190 from 195. So it's 12 and a half, and you add 12 and a half to it. So 195 plus 12 and a half is 107 and a half. So anywhere between 82 and a half and 107 and a half, the structure is going to be worth some money. Your break evens are $1.75 above and $1.75 below. So it's 182 and a half plus $1.75. So 184 and a quarter. And then minus 175 off of the 107 and a half, which is 106, 105 and 3/4. Okay, so between those two ranges, you'll do better off being long stock in this structure than just being long stock. Above 207 and a half, then being long the stock would have been better than not doing anything. But I think you kind of have a wall. I don't think it just jumps right to 200 over the next week. Could be wrong, but in this tape, I think they're looking to sell anything. So, if it does jump, you can get like a call it a 190 level. But I think you start stretching it to, you're talking about 190 tomorrow, but I'm talking about stretching it over the course of the next, it'll take some time to get to 200 and 210. That's all I'm saying.
Okay, cool.
All right, so that's Disney. And what is that? That's tomorrow night?
Yes, I think so. Yep.
May 13th. Okay. I'll tell you one earnings that I think the market's overlooking it. And that was Blink. Now the stock is traded really well, but I was reading an article. I just thought it was interesting. They're basically EV charging machines, right? But there's an article about GM. Basically, GM was they're putting together their network. Basically, Tesla's built their network of these charging stations. GM is using all the people that have the chargers and is saying, we're going to build your network. They're going to have a GM app. Everything is going to be labeled GM, and GM is you're going to say, where's my charging station? Where's the nearest charging station? And it's going to send you wherever GM's map sends you. And, Blink is one of the people that are going to be on this app. There's several of them. And apparently there's several more coming to market, more companies. So GM essentially is not really giving that much value to any new type of charger. They're basically saying a charging machine is a charging machine, and Blink is just one of the many charging machines that there will be around. I have to look a little bit more into that, but I just thought that article was interesting, and I looked at the chart here, and I see clearly they're defending. You can do this now yourself, just by seeing it, but clearly they're defending it right around this level. Okay, you got the 200 here. It traded right off of that level yesterday, but the stock has been weak. You have this sort of move from 46 to 32, and then from 32 back up, and then you should have the 46 to 32 is 14 less about 41 is 27, and look where it landed, right at 27. So sometimes this stuff works. You can see it's again, 46 to 22, 14 trades up to about 41 minus 14 is 27, which is exactly where the stock found a buyer. So looks like the machines are on this one. A move could move it back to 42. Okay, right up there. But that would be some hell of a move in this type of market, and with this type of product that apparently GM is saying that there's really no differential between you or the other 14 people that I'm going to have on my app. And that's troubling because Blink is trading it's basically trading at some fantasy level, expecting that Blink will take over every charging station throughout the US. And that might not be the case. So this is something where I think, if you're going to play this one, I think they have these a little bit too cheap for today. If I was going to play it, just because the market and the tape is is so crazy up and down. You know, half a position for the number, right? And or third a position for the number, 166, these 30 puts. And because excuse me, I think it can trade toward 25, 26 on a bad number. It's a cliff here. So, you know, I want to be there when the cliff breaks. But if it doesn't break and it starts trading back to 34, 36, I can take my other 2/3 and I'm going to look for puts to sort of play somewhere around here, right? More in the shorter term, just until this whole EV gets cleared out. Usually what happens is you just got to keep pressing them until they ultimately tell you when the bottom is, and you'll know that there'll be hundreds of millions of shares trading in the stock, and you'll say, okay, I get it. Everybody's buying at these levels. Let's get out of it. Okay.
Right. Okay, cool.
Good.
Before we jump into more names, let me ask you a question from yesterday. And there was a question about UOA, and was there UOA back in the day? How did you guys look at UOA?
Great question.
No software, no machines. Yeah.
Yeah, there's no software. People ask me this, and I always say, first thing I say is, I was the UOA. I didn't have to look. I was the UOA. I sat on a desk with the biggest traders in the world, you know, options traders in the world. We were there. We were the UOA. Not that we were the other side. You know, they would come into us. They would try to buy 10 to 15 to 20,000 options. And we would say, okay, yes, sir. You know, what do you want? Okay, fine, we'll do it. And then we would go tell the brokers and the market makers on the floor, print it here, and that's it. You know, market makers back in the day, there was thousands of them, thousands and thousands. They're all on the floor. And UOA, you know, has been around for quite a while. I mean, it really picked up more in the I would say in the late 90s, right when I started, really. And it wasn't me. It was just that's what we were talking about. Because I say that because the large hedge fund started popping up really in the late 90s. Okay, that's when the more hedge funds started trading. Also, you know, many people don't know that in 1995, you know, there was only 150 million options traded annually. 150 million annually. Today, you know, there's, let's call it, how much, maybe that happens in a week, a little bit more than a week and a half. Get 150 million options in a week and a half. I mean, the difference is night and day. So there weren't that many people trading options in 1995. There were institutions and we were trading them. But by the time it got to 2000, 2005, the market was growing tremendously. So back in the day, I was the UOA. You know, if you asked me what was the UOA, I would tell you off the top of my head, I traded it. It was this. They were buying this. The semis, Rajaratnam. Oh, he's buying Micron calls. Like, that's the UOA. Like, so people, that was our conversations. I was the one putting up all the semis, biotech names. Guys were killing me, ripping my head off, buying, you know, 10,000 calls in DNA and at the time Genentech and Bristol Myers and Merck. And, you know, right before the crash, 3 weeks before the crash, they're buying, you know, 5,000, 6,000 puts. You know, some of these names, they caught me pretty good. You know, it's just there's no hedging. But so the simple answer is I was the UOA with a group of, you know, guys at Bank of America, Morgan Stanley. You know, there's 7 big banks that were trading most of the flow. Probably 7. That's a good number. But, you know, give credit to John Najarian, who was a market maker on the floor. And he said this is something he used, and he built a machine to sort of track it. And there were some there popping up, but he built something. He created Options Monster. Eventually, they sold that, and you know, that's where UOA was really born. He was a big ambassador for UOA on retail. We used to hear him on CNBC. That CNBC, the TV was going on, and he'd pop up and he'd be talking about UOA. But you got to remember that the chain of command was, if I wanted volatility in, you know, Micron to be lower, then trust me, it was going to be lower. It didn't matter whether there was, you know, 300 market makers out there saying we want to buy it. If I had a big corporate, and it's not just me, it would be more because we take down a big corporate position and we have liquidity, you know, and we need to sell it and offload it. And nobody knows that we have it. So I'm going to, you know, sell some here, sell a little bit there. So, you know, it's really the upstairs players, the big investment banks, they control the market. They control where the volatility is, not the market makers. And so, you know, John Najarian gets a lot of credit for sort of bringing it mainstream. But at the end of the day, the big flow was coming from the desk. We were seeing it, and the brokers were relaying it. So the way it was, you know, I was being relayed all day. I had 30 brokers. So 30 brokers were calling me. 30 brokers were calling me and telling me, hey, something's trading in Texan, or hey, this semi, or hey, AMAT or Micron, or they were calling me up, telling me what the UOA was because it was coming from the floor.
Right.
And I was one of 7 big semiconductor traders or biotechnology traders back in the day, where there was other ones, and we were all trading the same books. So the UOA there's been a lot of new machines that are bringing you the information. Obviously, here we're trying to help you dissect that information, to analyze that information. What does it really mean? Even the alerts, you got to be careful. A lot of people like the alerts where the intermarket sweeps and whatnot, and that's a fast game, very, very fast game, and you got to be in there so quick and get them. But you know what? You catch a big one and it could work, right? Right. 4 or 5 times a year, you will literally catch. There'll be this intermarket sweeps in front of a very large takeout, and if you're in there, boom, all of a sudden it explodes. Peloton, just only a couple of weeks ago, there were put buyers right at 9:30 in the morning. Put buyers. All of a sudden, taking market sweeps. It's like if you got to be in it to win it, right? You got to be in it. You got to be watching it and get alerted. And if you said, all right, this is the one, you buy some puts. Boom, puts went up by 10 times in a few hours. So UOA there's a lot of different ways to play it. I think the better way, a way that once you learn it this way, you can go play it that way. That's everybody's playing it in a different way. But you have to learn it first and understand, because you really have to start making quick decisions. The faster the game is, right? The faster, the more you're going to try to play that the quick delta game, which is, hey, he bought 1,000. I just want to buy it, and then 10 cents later, I'm going to sell it. I'm going to make $1,000. I bought 100. Great. Like, okay, go home. That's it. I made $1,000 for the day. You can do that. It's just, I always say, learn what you're doing first, then decide how fast you want to play it. That's the 110-mile-an-hour fastball. Not many people can hit that, consistently. So, and you're literally chasing everything around. So, it's a little bit different game, but same tactics, same players, same people. So that's the UOA story. That's what I can tell you. But yeah, I've been doing UOA for a very, very long time, and lived it. Like, it's very different when a market maker, they're not talking to the customers. They're talking to the market makers. We're talking to people, in general, like myself, the banks. Now, we were the biggest players in a name. We were bigger than the hedge funds, frankly. The hedge funds would come in and, I had 1,000 positions in, let's call it Micron, right? I had this calls, that call, this puts, all over the place. And a hedge fund just wanted to buy 10,000. I had 1,000 positions with, let's call it I had 100,000 options on my book, inside my book, all different strikes. Wow. He wants to come in and buy 10,000. My job is to figure out how that trade is going to fit into what I'm doing and how I can offer and make the price that he wants. There's a lot of nuances going on in there, obviously, but part of the big nuance was, we're Bank of America. That's one of the biggest customers, not just in derivatives. He's a prime broker. He pays stock commissions. He does bonds, IPOs, convertible bonds. So you have to make him happy. He can't walk away upset. That said, don't lose money. Those are, you're sitting there and that's the goal. Make them happy. Don't lose money. It's hard. It's not an easy game, but you get to see a lot. You get to see the things coming at you and how they're coming at you. And you get to, feel the market, because they're coming in, when they want something, they're screaming on the phone. It's not like they're like, hey, how do you do? Sometimes they're like, I want this price right now. What? Like, why?
What you gonna do?
Yeah, you want to stop, and they're cursing you out. Right now, I'm going to Goldman. Okay, fine. Like, what is it? Okay, fine. You're always making that quick. It's literally 30-second decisions on. I used to say, somebody asked me what's my job. I'd say I'm playing Russian roulette all day. It's like, I'm just literally,
Right.
hopefully this time is not the time that there's a bullet, right? A lot of the times that's how it is in that game. And the hedge funds then tell you they're sorry, we didn't know anything, and then that we'll give you more business. Let's go to dinner. We'll give you more business. Okay.
Right.
So that's UOA. That is the history of UOA. And, yeah, it's something that I think is, there's a lot of stories, and, a lot of drinking too after work, a lot of drinking, a lot of going out and sleeping it off and going, I hope this doesn't blow up in my face, and then it turns out that all the guys that we were dealing with, they, not all of them, but I mean, a lot. I'll tell you this, the ones that were in the newspaper that were getting in trouble, those are the ones that were, they were the ones that were big users of options, right? When you have an edge, we talk about options as confidence. Well, these guys had the best confidence. They had, you hear the tapes. It's incredible to go back dealing with, let's say, Rajaratnam. It's incredible to go back and hear him on the phone saying, you know, he knows the answer. He knows that Intel's going to report, you know, $4.10 as an earnings number. And you're like, he's talking. I would listen. I was fascinated by it. So I would actually be on the phone. I was actually watching the news, and I was watching everything that was coming out, and they were putting the FBI tapes, and I was watching the whole case, and I'm going, you know, after he's getting off the phone talking to like some guy in Taiwan who's telling them that, you know, Intel's going to blow out the numbers, he hangs up the phone, and then he was calling me, and he was saying, you know, I'm thinking, where can I buy some Intel calls? And, you know, I'm going to buy 15. And it's like, okay, why do you want to buy them? You know, we like the stock, you know, it's okay. Right. So next thing you know, stock is like boom, boom, you know. To me, it's fun. It's fun to go back and be like, wow, that was amazing. Like, you know, so as they were in 2010 to 12, literally arresting people, wow. I'm thinking, these were the guys that were like, I was like, I knew, you know, I was saying to myself, I knew there was something going on. These guys were just too damn good, you know? So it's interesting to go back in time, and, you know, it's all history, but, you know, that was UOA. That was sort of my position within the UOA. And you learn a lot. You learn a lot by losing a lot. Right. And when you win, you're like, oh, thank God. But really, it's when I remember the times when I lost. I remember the times where I lost big because, you know, someone came in to buy Merck puts, and then 2 weeks later, 3 weeks later, people are dying of a heart attack. They cancel this thing, and their big drug is done. I remember that one. That was a huge loss. I remember the time where a guy comes in at 3:50 in the afternoon when he wants to buy DNA calls, and, you know, at 4:05 they announced something and it went up. I didn't do the trade, but later on, you know, some of these guys don't realize that we were friends. I was friends with the biotech guy that traded at Citibank, or that traded at Goldman Sachs. And we would talk and be like, and we would say the hedge fund, did this guy come in and try? He's like, yeah, he tried to buy it from us, but we didn't do it. And they were like, the Morgan Stanley guy did it. And like, oh man, you know, so, and you know, whoever did that trade, there was no hedge. You wouldn't be able to get out, and, you know, probably lost $10 million. So this is, you know, we were all enemies, you know, we were different banks trying to get competitors. That's a better word. We were all competitors, but when we met each other, we all talked a little bit, and we're like, yeah, are you getting beat up over here? Yeah, this guy beat you up? Is this a good client? You know, and the more friendlier you got, the more you got information on who was good, who was bad, who do you want to stay away from. So nice. Anyway, I could talk about this till I'm blue in the face. It's already 2:02. Why don't we just give people a couple things to look at? We gave the Blink. There was some Visa calls, Visa calls, people shifting calls from the upside calls down to lower strikes by 20 up in BABA, the June 235, 255 call spread. Visa, we're seeing a call spread again shifting lower as the stocks are coming in. These are names people want to own, so that's something to look at. EQT, someone sold 25,000 puts, 85 cents, obviously telling you where they'd like to buy the stock. That's someone who's a huge holder, and he's saying, you know what, I'll take a dividend. I'll sell 25,000. You know, I was like in the gas realm as well. Lowe's put spreads we were seeing, and that's all I got, my friend.
Cool. Great. Right, great story. Great session. Thank you. You too. Thank you. All right, guys. Bye. See you tomorrow. Bye.